bit of a beat on the margins, 23.6%. This compares with our expectations of 23%. Rohan Gupta joins in now. Rohan, your thoughts, initial thoughts on the numbers? Net profit at 936 odd crores, margins at 23.6%, and we have revenues as well, largely in line, marginally better than our expectations, if you must.
Yeah, Rohan, are we audible?
Yeah, sorry. Hi, good morning.
Yeah,
I just missed you on the last point.
Yeah,
hi, Nigel, hi.
Yeah, Rohan, we were asking you, what's your first take on the numbers? Prima facie, it appears there's a bit of a beat on the top line by close to around 5% in comparison to our poll. But the margin beat is something that's looking even better, close to around 50 basis points in comparison to our estimates. Your initial take on these numbers?
Yeah, Nigel, hi. Even we are also going through the numbers, but yes, prima facie, it looks good set of numbers, and especially on the margins front, yes, I fully agree with you that there has been some beat on our estimates, even in the margin front also. We await for more clarity, because in this company, definitely at EBITDA level, there is a strong set of numbers, but what we need to focus more on the forex losses. And
so the forex losses this time around have been 221, Rohan. Rohan, the forex losses have been forex expense has been 221. You adjust for that, and the number you get is 2,665 crores, which is much above our expectations. But what I'll do is I'll ask you to hang in there. Sonal is joining us now with all the numbers. Sonal, it looks like a big beat on the EBITDA front. Revenues also above expectations.
Yes, it is a big beat as far as margins are concerned, and that has been something that the street was hoping for. But margins have come in much higher than expectations. So as you pointed out, EBITDA at 2,600 crore rupees is much better than the number that is 2,388 crore rupees. Even in terms of margin, there was an expectation of a decline, but the company has done well. So margins at 23.6% is much better than expectation of 23%. Yes, it is a decline on a YY basis, but that was expected because of higher raw material prices that the company has been facing. As far as the revenues are concerned, at 11,297 crore rupees, that as well is a big beat on revenues. Profits absolutely in line with estimates. But as Rohan was pointing out, the company has not provided internal details because we are awaiting the investor presentation. But if we look at the internals in terms of what the expenses the company has made, the other expenses have shot up to 2,337 crore rupees versus 1,800 crore rupees on a YY basis. That's a 400 crore increase. Despite that, the EBITDA margins have been strong, and that is led by higher gross margins. So this time around, gross margins have come in at 53%, which compares with around 47% on a YY basis. So this is the beat that has come in for the company despite the higher raw material prices, and this is largely because company did take some price hikes. But the extent of that and what is the volume growth this time around, we'll get to know only via the investor presentation, and also the breakup in terms of geographies. But by and large, the basic numbers, they look really strong. The stock is up 2% despite the 4% rally that we saw on Friday.
Got it. Okay, all right. So now you've put those numbers into perspective. Rohan, now you come back on. You've heard what Sonal had to say. So prima facie, these numbers look like a bit of a beat. If this is the case and there is no big one-off, that has bumped up these numbers, how do you approach the stock from here on? What is your current rating on the stock? Go ahead, Rohan.
Hey, Nigel, hi. So yes, if we just quickly calculate the EBITDA numbers as of now, it looks like 2,500 crores of EBITDA on adjusted numbers, and what we were estimating is a 2,300 crores. So definitely, even on our numbers, there is close to 8.5% kind of beat on EBITDA numbers, which is definitely pretty encouraging in a given current scenario. We were definitely fearing that the raw material prices has gone up significantly, and if the company is not able to pass it on, there may be some bit of pressure on margins, but it is not exactly the case in the current scenario. So yes, numbers are pretty good, and we have been maintaining our buy recommendation on the stock. We have been pushing this stock because of their solid growth and also their ability to scale their margins. Virtually, overall, the margin profile which company is guiding over next 2 to 3 years to almost 25%, I believe they are on track, and we remain positive on this stock.
All right, take that point. The stock holding up with a gain of almost 1.5 odd% right now. Rohan, thank you for joining in, and thank you, Sonal, for putting sense into those numbers as well. The stock holding at around 800, but this month itself, it's been an outperformer. It's gained almost 7.5 odd% as against Nifty, which has declined by about 1 odd%, and a lot of the other sectors and the mid-cap index alongside the peers have seen a big dip as well. With that, we'll step into a short break. Before we do that, here's something that you, our viewers, must take note of. CNBC TV18 and the National Stock Exchange, we've come together to promote investor awareness through a special campaign called called Informed Investors. It empowers you to make the right decisions with your money. An investor needs to remember to fill in all the relevant details correctly and completely in their KYC and strike off all the inapplicable clauses. Leaving any slot blank could lead to someone else making that choice for you, thereby making a financial commitment on your behalf. Ensure that you fill the KYC document and the form on your own and receive a duly signed copy of your documents from your broker.